Ladies and gentlemen, good day and welcome to MIDHANI Limited Q1FY22 Earnings Conference Call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Mitra from ICICI Securities. Thank you and over to you, sir.
Yeah, thanks, operator, and good afternoon to all the participants. Thanks for joining in. So we are here to discuss Q1 FY22 results of Mishra Dhatu Nigam. We have with us the MD of MIDHANI, Mr. Sanjay or Dr. Sanjay Jha. So without further ado, I hand it over to Dr. Jha for his opening remarks. Over to you, Dr. Jha.
Yeah, thank you very much for giving me this opportunity. So I welcome all the investors for joining to this conference call. Friends, as you all know that this quarter, which was the first quarter of this year, that FY22 has been a very mixed, I'll say that feelings or response or mixed. I think the functionality as the functional requirements are concerned. We have started this month, the April and May, as you know very well that we are in the midst of a very peak of the second wave, and every entire nation was facing that, and Hyderabad, Telangana is also not untouched by that type of effect of this pandemic. But one more thing, that since we had the experience of understanding taking that the first wave, the lot of understandings were there, and people had these protocols as far as the COVID guidelines are concerned. But the impacts were very high for the second wave compared to the first wave, and which has been felt on the employees also. So we had a lot of infections started in the company, and then we had a lot of restrictions coming across the country, as well as in the local condition also. We had a lockdown situation, and which has gone right from the complete lockdown to then partially lifting. So we have passed through the different phases in the next, that April and May, and of course partly in the June also. But then in this process, what has happened, since we understood that how to operate during this COVID time, so we continued our operation, but not to the full scale. But it was not like the first wave. We had a complete shutdown of the unit. So we are operating, but a lot of logistics were not available. So certain things, like suppose you have to do some outside contract activities, job work outside, where you are depending on their supply chain, some of the processing of our material outside and getting it done, then transferring it to Hyderabad for further processing. So there some sort of we had the restrictions, and we have faced in our dispatch and supply chain also. So in spite of that, I will say that our people, they have done reasonably well, and at least on the VOP front, which was last time, we had a meager value of around 87-88 crores. We could able to have 124 crores in this quarter, and we had a 41% jump in that VOP part. So definitely, as your VOP is more than keeping the same amount of, more or less same amount of fixed cost, there is an advantage on that side. In addition to that, we also have at this period that certain things like we had advantage of reducing our raw material consumption by taking some of the strict measures and improving the process efficiency, and there also we could get substantial amount of some savings there, so which can be seen in our results also. So with this type of performance this year, this means this quarter, that is 21-22, first quarter, at least we have got a profit. Otherwise, it was some symbolic loss we had incurred in the last year. So we got the PBT of around 25.6 crores, 25 crores around, against the earlier time the loss of around 42 lakhs. So this has come as a good like moral boosting for the people working in the company. And now when we are entering in the second quarter, I feel that indications are good now, and we are moving effectively, I will say. It has come to the almost the fixed one now. So things are now in the totally in control, and we are moving effectively in that second quarter. And during this period also we have done one thing. Our project activities, which we are indicating from last couple of years, and seeing that we have 2-3 projects which is going on. So those projects also, the progress has been quite satisfactory, I'll say, in this period. Even though we had 2 phases of the lockdowns, but our people, they were able to manage. Two of our major projects, where I'll say one white plate mill and another is that one in the armor plant in the Rohtak, has progressed very well, and I am very happy to share with you that a white plate mill which is coming up in Hyderabad campus itself has come to the stage of now the commissioning has started, and initial indications are good. Equipment is performing, it is giving good output, but it is still under the commissioning stage, and full-fledged commissioning I will be announcing as when the entire trials are conducted satisfactorily. But initial indications are good. That was one of the biggest challenges in this period, to bring back that equipment into operation, and that also with the involvement of lot of foreign OEMs. The foreign personnel, they have to travel all the way from Europe to India, and number of instances what has happened, that even though India is having less number of cases, they are having more. If once the Indian COVID condition has gone to the bad phase, in their country it was in the better condition. So all those things have put a lot of restrictions on their traveling, and in spite of that, with our consistent effort, we are able to bring them here, given the confidence that yes, we are going to take care, and they did a fantastic job. And at one moment of time, we had a half a dozen foreigners working inside the plant, and that's why we were able to bring this equipment in the operational condition. And now we are also in the process of putting our armor facility also into the operation very shortly. A lot of operational things have started there also, but there are some statutory clearances required from the local government, state government, which is being taken up. And today also again, during the COVID time, that also has got affected, because you cannot travel, you cannot call them for inspection, and the response will be very, very slow. So anyway, those things we are going to handle progressively. But that project also has now, it is coming to in our grip, and I am sure that very shortly that also will be installed. So this is what I am talking about the project side. Coming to that other issues, in fact, we had a order book position the last year, because of this pandemic condition and lot of uncertainties in getting the flow of funding for the various projects. And the order inflow was slightly inferior, but then this year it has picked up now, and especially I'll tell you, whatever we have done in the last 2 years on the export front, it is giving the good results now, and we have a good visibility for the export. And as already I have mentioned that in the year 2021, we did almost a jump of around 85% in growth in the project export. I am sure that this year also will do some good growth in the project export also is expected. So on that export side also we are moving quite respectfully, and internal order flow also this year I am expecting it is going to increase. And certain things which already we have mentioned that a lot of products we have indigenized in the last 2021. So that is going to give our revenue inflow in the 21-22. The quantity is going to increase, and we are going to get certain things in the form of the revenue reasonably in the good quantity, and the various projects now getting approved. So from defense, I am seeing that good inflow is expected. Defense and aerospace. The space already we had a quite comfortable order book position. So this we are executing now, and there is certain again some inflow is coming from the space also. And as you know that space has gone for now. They are going for the public-private partnership model, and where some private players are entering in the Indian space program. So MIDHANI has a potential now as a potential material supplier to have a tie-up with certain whomsoever is winning the contract. So the materials are again expected to join from MIDHANI. So we had 2-3 round of discussion with the various agencies who are expected to get the orders or expected to get the first project coming in the private sector, and I am sure that there also will be having a good beginning. Initial start will be there. And coming to the future projects or future prospects, our main target is now to enhance our capacity, which is our core capacity, and there the capacity includes the melting, and in the melting basically on the titanium alloys where our requirements have gone up in the country. There is a need to improve our production in the titanium alloys, and there we have decided to set up a new titanium facility exclusively for making the titanium alloy, and that facility also we have started working. We have placed the order for the equipment, major equipments, and also the work is going on inside for making a new facility. And in addition to that, in the primary melting from the special steel sector and the super alloys, we are setting up a 8-ton vacuum induction melting. So that work also is progressing very well during the COVID period also. That project has moved very effectively, and I will be sharing with you the information when it comes for the commissioning. Right now installation is going on, and it is going in very brisk pace. And also we had certain other developmental program which we have tied up for investment casting. That work also is going on. So what I say that our company also is thinking about the future, and in the future like enhancing production, then going for the export market, then also seeing that how the domestic requirements are met in the very less time. So these are the different activities going on, and there is one advantage now that with the government giving the lot of putting the restrictions on buying the material through the global market by putting the limitation that beyond less than 200 crores tender has to be purchased from the domestic manufacturers only. So we are getting some advantage of that also, but definitely the price is a factor which you have to compete, not at the cost of that it is a monopolistic type of approach. So that is also how your company is doing well, and a lot of orders we are now getting at a highly competitive price. And one example, I'll say that the flow of orders in the form of SG set steam generator tubes, which we have supplied to BHEL recently, and which in turn going for the nuclear power plants. We have supplied 2 sets of tubes for a steam generator, and third set is already under production. So basically, there also I am seeing the visibility that we may again win some of the tenders in that category also. So overall, today market is good, and if coming for our white plate mill operation, once it is getting stabilized, I see very good visibility and business in the sector where there is a lot of vacuum, and MIDHANI will be the one of the potential supplier to fill that gap. So overall, I would like to end here, and with the one last one, that our order book position also has touching today around 1500 crores, and it is not the value, but I see the lot of requirement coming in the future, and there if we are able to supply on time, more and more orders will be flowing in our folds. Thank you very much. Now it is open for further discussion. This is all from my side.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. We have the first question from the line of Bhagyesh Kagalkar from HDFC Mutual Fund. Please proceed.
Regarding the order book expectations now for the next 8 to 9 months, see, this talk that 200 crores tenders will be open for the Indian companies like us is going for a long time, the government policy. But where are our bids now, and what do you see the order book position by end of the year? What is your target?
See, that today, as I told you, except the space where we have the long-term requirements for 2.5 years, now practically it has come down to 1.5 years. So beyond that, certain other orders, normally people will not wait for even the months also. So the expected time of delivery once the order is placed in a 6 month, sometimes maximum 1 year. Now that is where I say that if whatever we have the 1500 crores today is going to add further as we progress fast. And there are various order processings are going on, which we are aware, and it is on the various different approval stages, especially even from the defense or the space also. So those things are going to materialize with the time. And by the time, whatever I have the 1500 crores order book, I will exhaust something by supplying in another couple of months, then further addition will come. So I see at the end of the year, let's say if I am able to do this year around 1000 crores, I need the minimum inflow of order of around 1000 crores. And I don't see any reason that why 1000 crores orders would not come. There is a good visibility that we will get the 1000 crores worth of order, and also we will be executing to similar lines. So it is coming to almost in the area order the value of around 1400 to 1500 crores order book will remain once we are closing the FY22.
Okay. Sir, should I interpret this? Okay, you would like to close the year at 1000 crores revenues. So a lot of the orders are short-term oriented, that you get them in a month and you finish in 6 to 9 months essentially. And plus there are mid-term orders, say for the white plate mill, etc. will continue to come.
Yeah.
Okay.
Yeah, it will come.
Okay.
See, I'll tell you one example. White plate mill, even though we have not started, today I have the order book for that also around 20, 25, almost 12 plus 8, around 15 crores order is already there with me, and another 5 crores is visibility is there. So, but these orders we have taken very conservatively because we don't want to commit as on now to have the full capacity of the equipment. Yeah, this is under commissioning stage. So still in the commissioning stage, we don't want to waste that material. Whatever comes out reasonably at the very less amount of capacity utilization, we'll be able to execute that.
Okay.
So we are not counting that as such because that we are counting in the area of commissioning only, that those things will go for in the commissioning trial only. But definitely sales will be there. Once you've made the product, you have to sell, you can sell it.
Okay. And your facilities you feel are gearing up. The foreign consultants are already.
Yeah.
Okay.
Yeah.
So for next year you can have positive, much farther revenue targets as well as on the margin side because the plate mill will start running, etc. Okay.
Yeah.
Okay. Thanks, sir. I'll come back later on in the queue.
Yeah.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Jinal Sheth from Auriga Capital Advisors. Kindly proceed.
Good afternoon, sir. So you, in case of titanium alloys, I just wanted to understand the market a bit, the market opportunity and the players out there and the kind of capex that we intend to put there. Can you just talk about that?
First of all, titanium alloys manufacturing capability in India is only with MIDHANI today. Other than MIDHANI, no other Indian companies, they are manufacturing titanium alloys in the country. And coming to that requirements for titanium alloys, right now I have order book position where I will be producing around 500 tons of titanium alloys in this year. And requirement I see in the future, it is going to increase to up to around next couple of years. It will be touching around 1,500 to 2,000 tons. Will be the requirements. Now, one way is that either you can meet the balance quantity by import, or you can produce within the country. So you can ask right now how we are able to meet the requirement of this gap, whatever the demand and supply gap within the country. So mainly it is being met through the import only. So we are trying to fill this gap by increasing our capacity, and I see there is a good visibility in that area. So that's why we are enhancing our production capacity by adding new melting facilities. Now the capex requirement for that will be around, we are investing first in the one melting furnace, is very crucial equipment, already we have placed the order. And also we have to take some welding unit. So total I have seen around 100 to 150 crores investment will be there for the new facility which is coming up.
You did mention that currently, so if you see around 500 tons this year, but you also did mention that some demand is being met by imports. So what is currently the industry size in that? Because if you are the only player and then you're importing, so I didn't, if you can.
No, we are supplying requirement, but since we are not able to meet the entire requirement, we are importing also. Understood now?
Right. Understood.
That gap only, now we are enhancing the capacity.
Understood. All right. Thank you. I'll come back with you.
Thank you. Participants with questions, kindly press star 1. We request participants to kindly press star 1 to ask a question. We have the next question from the line of Prabir from Ratnabali. Please proceed.
Yeah, thank you, sir, for providing me this opportunity. So I want to understand one scope of MIDHANI. Is there any scope? Like recently, HAL has received an order of around 40,000 crore for 83 LCAs. So India is sooner or later going to make a lot of fighter jets, and these fighter jets require a lot of titanium, super alloys, and etc. So going forward, if I see the scope only for say this 83 LCA Mark 1, so what gonna be the expected scope of MIDHANI for this project?
Yeah, actually, they are also trying to figure out that what will be the indigenization in that LCA as far as the raw material is concerned. So they have worked out, and basically they are coming in the 3-4 categories. The first one is and fiber component, which still they have to depend on the import, or some raw material import and then fabrication inside. The second area of titanium alloys is already we are supplying to them, and we are expecting some orders, and some orders had already has been placed also for, but not for the full aircraft, full project, but they have lost the order also.
So, but then
And
if I
second part on super alloy also, and some of the special steels, we are getting the orders. So we are entire 83 aircraft LCA program. MIDHANI is going to get a good amount of orders as far as the raw material part is concerned. But definitely for the fiber composites and all, it is coming from the outside.
But sir, if in terms of percentage, I want to understand, like for a aircraft of LCA, what is the percentage of these three divisions, like the composite and then titanium alloys and super alloys, requirement wise, and how much MIDHANI is going to cater to that?
Exact figure I am not having, but I will tell you, it's not going to be the big percentage. Because if you see in any aircraft, basically the engine part is still, we are, very well that we are getting the engine from the outside. Engine is coming from GE. And as I said, a structural component also is coming from the import source. So other metals and all amount is limited, because majority of the value raw material is used in the engine component. And since the engine is coming from the outside, there is a very less part left in the other areas of the aircraft. And the aluminum alloys being used very widely for main structural components that is going for the inside. So because those things curtails that input of the material, but I see as far as the total is concerned, it will be around 300 to 400 crores of orders will be definitely there as we progress. But everything will not come at one time. It will come in the batch batches, because all the aircrafts also they are not going to deliver. It is a staggered delivery. It will take some time to complete the entire supplies.
Okay, so this is my last question. Last question is what is the percentage of nomination and competitive tenders in your current order book? That's it.
Currently, order book position, I will say by nomination, we have around 70% around, you can say. Balance 30 is coming from the competition only. But that 70, whatever I am talking, is that since we have got these orders long back, but in the coming days, that is going to be still lower. And I expect that since, like say, if you titanium, if you see, I am the only supplier. So definitely it will come by nomination. So these are the area where, since we are the exclusive in manufacturing, so it is coming by nomination. It is not because that there are some 2-3 suppliers in the country and they are giving MIDHANI only by the nomination. There is no alternate today available. That's why it is coming by the nomination.
So what is the scope of, what is the growth projects? What are the growth projects in the next 3 to 5 years?
I am telling that now we have the project, mostly we are working on the project from last 3-4 years, and all projects are getting commissioned in one by one in sequential way in this financial year. So I see the majority of the projects we are going to commission in this financial year. And there, as I mentioned, that white plate mill is one of the biggest among all the projects, which will be around a value of around 550 crores. And in addition to that, we have exclusive armor plant which is coming in the Rohtak. That also we are going to commission this year only. And another one is 2-3 capacity augmentation facilities, like, as I said, vacuum induction melting. Then also we have some investment casting. So these projects are also getting matured now. So everything, those things will be commissioned in this year only, FY22.
Okay, sir. Thank you.
Thank you. The next question is from the line of Himanshu Upadhyay from PGIM Mutual Fund. Please proceed.
Yeah, hi. I had two questions. First was, what is the capex line for FY22 and FY23 over all the projects we have envisaged?
FY22 we have the capex target of 230 crores. And I can say it will not be less than that. It will be almost on the similar lines. So next 2 years I am seeing that there is visibility is there. But beyond that, we have to see that where we should invest and what are the other prospects available.
And one more question was, in the older calls, we have stated that we are trying to diversify also, okay? And working on oil, means parts for oil riggers and everything, okay? Or mining and all those, where again where some of the parts may be required, or where we can do a lot of value addition, okay? With significant improvement in those markets happening, what is your assessment of what you were trying to reach over 1 or 2 years back? Where are you and how are you progressing there on those efforts of yours? And are you seeing any increased demand in those segments for what you have achieved till now?
One area of diversification, I said earlier also that we did some work with the railway. Now, you know, the railway, they are the bulk consumers of flat products. Flat products means like steel, the low alloy steel they use for railway coaches. And there already we are in the business from last couple of years. But now, since our own white plate mill is installed and we are commissioning now, so we will be supplying the railway from that sector. In addition to that, now this plant also we are making the stainless steel plates. SS plates also is going to be in the open consumer market only. So that also is the one line of products we are having. So diversification is now on the card now. In fact, diversification has been initiated in the last couple of years. But I see now from this year onwards, our share of diversification will be more. And the first one is what I mentioned about the railways, and also these plates and all, whatever I am discussing, it can also go in the mining also. But mining as such, I have seen that we are not having so much presence and not possible also, because their material requirements are very, very commercial grades, which are available, and others who are having a bigger capacity and all, they are more economical for them. So if we can solve there some chronic issues regarding some of the material problem, then only we can, we'll be I think profitable and will be also acceptable to them. So there we did some work with the Northern Coal Mill, But I'll say that now, so far, their response, we are expecting that performance of the material. If they say it is okay, then we can also enter in that. But right now, the volume I don't see much coming in the mining sector. But railway, I see that it will be in reasonably good beginning for us. And also in oil and gas, I am not talking about the domestic industry. At least I see that in export market, whatever we have supplied, some of the major items have gone in the oil and gas only in the export market. So I see there some good visibility is there in the export market to enter in the oil and gas.
Okay. And any thoughts on, let's say, next 3 years, how much can with your plate mill capex and railway and oil and gas, whatever efforts we have been making, how much can be the revenue contribution from else than defense and space over next 3 years?
Whatever investment we have done, I am not bifurcating in the sector wise, but definitely it will be major part will be going to again a space and defense only from them there. But as I said in the initial one, that facility also will going to use for the railway and also for oil and gas. So it is a combination of different requirements. Since the capacity is big, this mill capacity is coming to the very high level of around 30,000 tons per annum. So I see that serving to only a specific sectors will not be economical for us. We will be definitely serving the different sectors using this facility. So sometime we have to produce the very low value item also in large volume and high value item in the low volumes. But the equipment has to run and meet the regular requirements and go for the regular operation.
But we have not set any targets. We want to have this much from non-defense and space over a period of time. As the situation evolves, we'll decide. Would that be the right statement?
The order position will decide. The order position will decide that how much percentage will go to the defense, how much going to the space, and how much will go to railway.
Okay. Okay. Yeah. Thank you from my side.
Yeah.
Thank you. Participants are requested to kindly restrict your questions to 2 per participant. The next question is from the line of Jonas Bhutta from Phillip Capital. Kindly proceed.
Thank you for the opportunity. Sir, I missed your earlier remarks, but if I got it right, you're targeting almost 1,000 crores of revenues in the current financial year. If you can share, what is the likely breakup going to be between, space, defense, and nuclear energy and others out of that 1,000 crores?
Thank you for the question. First of all, I request you not to quote 1,000 crores right now because this figure giving is not a right way of giving that numbers. But what I say that I am targeting approximately, considering the growth of, let's say, 20%, 14-15%. Last year also we had the growth of 14%. If the current situation of pandemic is not going to adverse now, the next couple of months we are not get affected, definitely we will have the better prospects. But what I say that after addition of certain new facilities, it is possible to touch this magic figure of 1,000 crores. But very difficult to see the sector-wise formation. See, normally, if you see the last year also, we have done around, say around 50-55% for the space. So more or less, space will again dominate, and not less than 50% this year also. But definitely, other 50% defense will pick up, and it is picking up also. And balance number, if our white plate mill gives us the full support, it goes for the complete operation. I expect that some good revenue from railway also, as well as from other industries, and I'll say it is coming from the mix of the filling line. It can go for, let's say, plates using for the LNG application. It's because the wider plates are there, which are being formed in the form of the tube, and it is being used for making the LNG pipelines and all. So it is oil and gas will be contributing, so railway oil and gas will be coming from that sector. And some of the things which already we are doing outside processing, so that can be stopped and brought it inside. So there will be saving from that front because we are utilizing the in-house facility instead of using the facilities from the other companies.
So connected to that, sir, what is the targeted order inflow for this year, and how much have you done in Q1?
Order inflow, we are expecting around not less than 1,000 this year. And already in the first quarter, we have crossed around 200, 250 around, 230 around more precisely. And we are saying that now it will going to be nearing about 1,000 will come for this year.
So my second
but
question
you know that now, if you say that, as I said right initially, that if the LNG and all, like we have to supply the plates and all, the order book will not be lying in your ERP, and you can say that I have the order book position of this much value, it will come after I can supply next couple of months, 5 months, 6 months. These orders are very dynamic in nature, and the moment they find that we are having a suitable quality of product at the right price, across the order will come and supply and close. So that sort of thing is there. And export order also will not remain in our order position for the long time. They place the order, and then within a very short time we have to complete the supply.
Right. And my second question was on the white plate mill. When is that plant fully likely to get commissioned? And in FY23, should we assume full year of operations and revenue contribution? And what could be that revenue contribution? As in, what is your expectation of what kind of revenues you can do from the white plate mill?
Revenue value I cannot tell you now, right now, but tonnage I can tell you. 30,000 ton is the capacity for this mill, and we have to find out the product mix. If we are able to get the order for the high value item, then our targeted revenue will be on the higher side. But for normal low value steel with the same amount of volume, the revenue will be less. But definitely once we are listening fully by this quarter end or beginning of the third quarter, I am sure that we will be utilizing this mill effectively in the FY23 to the full capacity. This is our plan. And right now I cannot say that we are fully geared up because things are going on, and these mills are very, very precision and very unique in nature, so it has to be done progressively. So it is being commissioned now, step by step, and I am only told in the beginning that initial indications are very good. So we expect that very soon we will be getting this mill in its full capacity. But it takes around 3 to 4 months to stabilize and get qualified for the entire products which we have planned and for which this mill has been designed.
The reason I ask is, sir, because
Mr. Bhutta, I'm sorry to interrupt, sir. This is the operator.
Yeah, because this is an interconnected question, so I was just waiting for the management to finish that. Yeah, if I can just go ahead. The reason I ask is, sir, you've done a capex of 500 crores that would have, and once that gets commissioned, you will have a 20 crore depreciation hit on that. So to cover that depreciation, will you at least do 100 crores of revenues, or this plant?
No, 100 crores is very less. We will be having much more than that. 100 crores if we are doing it is very less. We will be definitely, our target will be not less than 400 crores.
From this mill. All right. Understood, sir. Thank you, sir. Appreciate it.
Yeah.
Thank you. The next question is from the line of Rohit Ori from Progressive Shares. Kindly proceed.
Hi, sir. I have two questions. If you can just share the timeline of commissioning of these plants, Tumkur, Kanchanbag, and Rohtak.
Kanchanbag, as I said, already started. It will be fully commissioned in the month of November.
Okay.
So December will be dedicating this to the nation. And so for timeline for Rohtak also, armor plate also is more or less in the same period.
Okay.
And we have inside one spring plant, there also timeline is in the same period. So you will be seeing that by the end of third quarter, we will be commissioning all three.
Okay. And sir, we had this dispute over the land in Nellore along with the aluminum alloy plant issues. So has that been sorted with the government?
No, I'll say dispute is already there, but what we have done, we have removed the part of the disputed portion from our boundary wall, and we have put the boundary for the entire land which has been allocated to us. So minus disputed area, we have made the boundary wall, and parallelly talk is on to get negotiated with the parties who are claiming and who has put the writ petition in the court to do the settlement and get that land under foot. But our project activity is not going to get affected because we have taken care in our boundary wall and whatever land we have earmarked for our industrial setup.
So this property was around 100 or 110 acres. So the boundary line which is made is giving how much acres of property to us?
It is basically it was 110 plus only, but then those things have been removed. So near about 109 is there.
Sorry, how much? 109.
Yeah.
Okay. So my last
exact
question
value
is,
I cannot tell you right now. Is almost
okay, that's okay. Approximation is fine. My last question is that with this turnover targets and the visibility of all the three plants coming by Q3 or Q4 and translating into a growth of around 18 to 20%, which you have said that it is your vision. Can the turnover of MIDHANI be 2 times from now in the next 5 to 7 years, translating into 18 to 20% growth CAGR?
Yeah, it is our expected. It is expected to go in range.
Okay, sir. Okay.
We have to see that how we are able to realize, convert those things into our revenue. But target should be that in that range only.
Okay, sir. Thank you. Thanks a lot.
Thank you. We have a follow-on question from the line of Jinal Sheth from Auriga Capital Advisors. Kindly proceed.
On the amongst all the different projects, over the next 2-3 years, this titanium business could be what kind of revenue, a percentage of total revenue over the next 3 to 5 years?
Yeah, it is a very important question, and also we are having a lot of brainstorming on that side. And titanium, since it is a very high value item, even tonnage wise it may not be very high, but it will have make a prominent place in our turnover, and I expect it will be not less than 30% of our revenue as we grow further. And in fact, last year also, if you see in our revenue, it was almost around 20% we have titanium. So it is going to have a prominent role in the future as far as time is concerned.
And what kind of realizations are in that business for titanium?
Realization in the sense, in which sector are you talking specific or?
No, okay, that's fine. My second question I would want is that now see we've spent close to 850-900 crores of capex from 2019 to 22, and revenues in the last 3 years have been broadly stagnant. So with all the investments and diversification plans, I mean, this is in continuation to the previous gentleman's question, but what we are saying is with all the investments and plans, what could be the revenue growth in the next 3 to 4 years? Ideally, because the money has already been spent, right?
Yeah, see, what happens that for any company, when the projects are in the line, and it takes time to get realized into the revenue. And all the three projects, if you see our expenditure is not having at one time. Whatever we have done, the investment of around, as you said, around 1,000 crores. More precisely, I think around 800 to 900 crores we have done, is on the period of 3 to 4 years. Now, I'll say now this year it is a year of completion. And it was supposed to get completed in the last year itself, one of the other major units, white plate mill. But got postponed, and then we have come to this year because of the pandemic. And but it was planned in the early of this year, maybe around March of 2021. But now, having seen the impact of COVID, now it is coming to almost a stage where we are finishing by the end of quarter 3 of this financial year. So, but all those things definitely will add to the revenue. And as you have rightly pointed out that what is the outcome, because already we have invested so much money, where is the revenue coming out of that? So all the three projects have its own revenue model is there. And I am sure that it will be definitely adding to MIDHANI's turnover in the future, and next 3 to 4, 5 years. We will be definitely multiplying it, and our orders will be, sales will be around 1,500 crores range. But I'll say for any business, that sort of thing is not only that whatever you have done as a capex, it also requires that how you are able to penetrate the market. See, market force is very important. You cannot ignore the market dynamics. The projects are coming, but the market dynamics also is changing. So one has to align at the market dynamics, and that's what we are trying to do. It was this project, whatever 560 crores we have mentioned, it has become like it has came initially thought of as R&D projects. There was no revenue model from this, a business model. It should become a profit center. But now with the change scenario and seeing the current market dynamics, we are converting into a business center and like a business model. That's what I would like to know.
Thank you. Thank you so much for your insights.
Thank you. We have the next question from the line of Abhijit Mitra from ICICI Securities. Kindly proceed.
Yes, thanks for taking my question. This question is mostly on, the installation and commissioning of the capital projects. So just wanted to understand what are the risks to this commissioning, that you see. Can there be further delays? And or we are pretty certain that, most of the operational issues have been resolved and taken care of to see progressive commissioning over the course of next few quarters, as you mentioned. Are there any risks that you would want to highlight? That's point number one. Point number two is that I think you briefly remarked that 27% of your last year revenue has come from titanium. I think that's a very, very, I think there's a significant number, and probably that explains the high gross margin. So how is this sort of, and I would presume that this is mostly aerospace. So how will this number move over the next couple of years? And combined with space and NEOM, what percentage of revenue will it be? Some idea on this would be great. Thanks.
First of all, I'll talk about the projects which you have mentioned about the certainty and uncertainty in commissioning. Let me tell you one point. This white plate mill, concept was done in the 2009. And 2012, the money was earmarked for this type of facility. And when the money was given, and it was realized that it is not sufficient to install the machine of that quality and that type of performance. So there were a lot of permutations and combinations going on how to minimize the cost and all. But finally, with a lot of deliberations and understanding, 2017 we were able to place the order on Danley, India for the rolling mill and other facilities. Now, Danley, India is the one part for the equipments and the other facilities, furnaces and all. But the basic civil design, structural design, then electrical design, everything was coming in our in-house with the people. And it was not a turnkey project. And turnkey project we are not done because we are not having sufficient money to pass on. So we have to economize that. And that's why we have handled the different. So at one moment of time, 30 different packages were being handled by the different our people inside. So those things took some time to bring it to this stage, and then followed by a moment we picked up the pace. COVID has affected a lot, which all of us are aware. But then I'll tell you that with a lot of persuasion and so many things, our consistent effort, that mill has come to the stage where now I can say that it is 90% already we are through. But then 10% also has a 10% in project case. So the project should be come to the.
Participants, kindly be online. We'll just reconnect the management line. So you are reconnected to the call?
Yeah. I don't know where I got disconnected, but we were discussing about project condition. So what I would like to submit that so many activities are there for any project. It is a combination of different activities, and anywhere you have some deficiency will lead to the adverse effect on the project progress. So in this total pandemic time, in the Rohtak, I'll tell you one example. So many equipments which have taken from the foreign origin, the equipments have come on time and installed and commissioned. But the equipment supplied on the Indian party, 2-3 equipments have not come on time. So this has resulted in some delay. But then now we have taken up with the supplier very effectively. And I am sure that if third wave is not there, there is no further disruption because of COVID. This we will complete by October, all the equipments installation and commissioning. So this is about majority of things already installed and commissioned there. And I'll tell you I cannot say right now, declare it officially, but certain activities already we have taken, and we have executed certain order also. Already we have done the execution of the orders using those facilities, partially, not fully. So these are the different success stories are there. So I am confident that whatever timeline we have decided now, we are not going to deviate from there. They are quite reasonable.
Yeah, am I audible?
Yeah.
Yeah. I think the second question was on the titanium plus space. I think as a combined proportion of revenue, how do you see that number moving over the next couple of years?
See, titanium, why I have told you that capacity we are enhancing. Right now, one product I will tell you, titanium flats, titanium plates are being imported fully in the country. Because nobody is there to roll titanium. So white plate mill which we have set up here, we can roll the titanium plates and supply effectively. So it is going to add further in our titanium production capacity, which was totally depending on the import. One way of looking on that. Second part on titanium, that number of new projects which are coming in country where there is a requirement of titanium. Earlier, for old projects also it was being imported. Now people are having some restrictions in going for global tender with less than 200 crores. So there also I am getting good support from the Indian industry for making the titanium alloys and different components. So there is a change in titanium, means increase in titanium requirement, and considering that only we are setting up our new titanium facility where we are going to almost make 1,000 tons of titanium per annum. So that is going to increase our capacity almost 2 times.
Yeah, that's all from my side. Thanks.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. I now hand the floor over to the management for any closing comments.
Yeah, it's a very nice interaction with all of you, and whatever questions have been asked is quite relevant, and it is also putting the management on very, I'll say, sensitive or very proactive platform, so that all our ongoing program, ongoing activities should be monitored and executed effectively, and so that whenever we approach to the investor, we should be able to tell them some of the new achievement and the new work which company has done. In fact, there was no question was being asked about the recent development for the different grades which we have given for the Atmanirbhar Bharat. But you must have seen our different reports or highlights that we have done extensive work on development of some of the unique products which has been, some of the things have been already has gone as import substitute, and few out of them already we have exported also. So it is an ongoing process, and MIDHANI, one of the biggest strength lies in research and innovation. So every time we try to innovate, and then we see that how we can quickly convert into the products and the sales. So that way our team is today geared up. We have a very strong team, and there is a consistent effort to make something new business also. So we'll be interacting in the future as we progress different areas. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.